Hello, I'm going to be going over why you should read the 10K report. And for those of you who don't know what 10K means, it's basically the annual report where the company publishes the majority of its essentially the filings that it needs to for the year, where it discloses multiple things, mainly the financials such as the balance sheet, income statement, cash flow statement, ownership structure, any changes to accounting, major risk factors, business report, and sort of trading update, and a whole host of other things included as well. And for those of you thinking, well, what's sort of really the use of it when, most of the stuff you can find nowadays on the likes of Yahoo Finance, Capital IQ, many other sort of platforms, which give you the basic bread and butter in terms of the numbers. You can see management interviews online. So you might think, well, what's the point of an annual report? And for me, it is crucial. And there's a few reasons why, but I think the main one is that it's direct to the source, but then as well, management are forced to release all information as per required by the SEC. And this is very important because there are oftentimes little things that are hidden in the annual reports buried deeply where management are forced to release it to comply with filings. Whereas it's something that they wouldn't, for example, promote or wouldn't be part of their promotional material. And oftentimes these are the most important things for me. And you might think, well, what have they got to hide? Well, of course, the better the management team and the higher quality the individuals running the company, the less likely there is to be something negative. But there have been many instances where I've found things when I've been looking at companies and screening for companies where I've gone, wow, this has saved me a lot of potential trouble down the road. So I'm just going to talk about two examples in this video. So first example I've had is actually a company called Honest Inc., ticker symbol HNST. And effectively what has happened is I was looking through the annual report, everything seemed fine, the company was growing and so forth. And then in little fine print do I see this little bit of writing just under one of the notes there. And it said that the business's insurance had paid out $20 million for a lawsuit settlement. And to me, that is a massive red flag when you consider the fact that this company in 1 year only earned, 4 million. It's basically break even. I mean, the market cap of this business is only about 300 million. So to be paying out a $20 million lawsuit settlement at a $300 million market cap is quite significant. I mean, if you think that is huge. That's almost a tenth of their entire market cap in this lawsuit settlement. And yet there was nowhere to be seen on the interviews, nowhere to be seen regarding investors asking questions, nowhere to be seen on the balance sheet, and it was all legal because it was covered by the insurance company, so they didn't come out directly out of their balance sheet. Now the premium for their insurance coverage will increase more than likely off the back of this, but it's not something that they necessarily had to disclose through interviews and sort of traditional balance sheets, income statements, and so forth. And yet that was a very material piece of information for me, which hadn't been spotted, except for that one small line in extra small font stating that. And that to me is very important. Another example I had is a shipping company. I believe it's Performance Shipping Group Shipping Company, something of that nature anyway. To me, they initially looked really appealing because it was trading at 1x earnings. Yes, they had significant dilution to the business, but you think, well, it can't be that bad if you see the CEO buying up a quarter of the market cap in stock, which is just insane, right? And you think, well, the tankers themselves are worth more than 3x, sort of like 3x the market cap, if not many times over the market cap. And it's at a PE of 1. Well, what's your downside in theory, right? Well, wrong, because if you see what's happened here and you read through the annual report, you would find again that one little table which gave you a breakdown. I don't think it was even a table. I think it was a few lines basically outlining the share ownership structure here. And what you would have noticed is that you had stock A and stock B, or A in preferred, right? And what most people didn't realize is that your common stock had 1 vote per share, which sounds pretty reasonable on the surface. And 90% or so of the stock was through these common stock. That was how it was issued, the structure. And then you had the preferred, which was owned predominantly by management and issued primarily only to management. And this type of stock, which is again in vast owned by management, like I'm talking like 90% plus owned by the CEO, had 10,000 votes per share. Yes, that's right, 10,000 votes per share. So this would have been very difficult to spot unless you had read the annual report, because it wouldn't have been advertised anyway. I mean, why would anyone want to advertise this, particularly if they have any ill intention or just doesn't reflect well on the company and doesn't align with their bonus or their share and stock performance plan? Why would they go out their way to do it? It makes sense, doesn't it? From that perspective. That's why I like to read through the annual reports. There are bits which may not be as relevant, but it's really situation dependent. There is no black and white answer. It's usually grey. Like if I wanted something where I needed to understand a bit about the ownership structure, then the annual report can be more useful, versus situations where I needed to understand a bit about the finances and the inventory and how they can store that. Again, that would be more important in that instance. So it really does vary, but generally I do think there are little things that you can find through all the dirt in there. Thanks for listening.